Morning, Siddarth. Well, we just had a technical analyst telling us that he would buy the Nifty at current levels. What would you do?
Good morning, Lata. I won't share the same enthusiasm.
Okay.
Yeah. So, how we are reading Lata derivatives data is that first thing, the cash data from cash segment FIS data, which is that this is seventh trading session where they have sold on an average 600-700 crores in cash market, which continues to make us feel that their interest in our markets has not returned as of now, irrespective of what is happening globally. Second thing, the beauty of derivatives data is that 10 people can read it in 10 different ways. Unlike technicals where, breakout is a breakout and breakdown is breakdown for all. So, if you look at implied volatility, despite market falling, it is not going up. Reason is because there is no significant open interest in Nifty. We all have been talking about that June open interest has been very less. So if people don't have position and if market is correcting, why will there be panic and why there will be significant built up in option segment which would lead to rise in implied volatility? So if someone is reading that because market is correcting and implied volatility is still not rising, therefore market will rise, I think that premise may not be hold true. What we are suggesting is technically also, if you look, market is beautifully moving in a lower top lower bottom formation. This is third time that at the downward side downward slope market has taken support and moved up or is trying to move up. We are not expecting this move to continue for long. 8150 to 8200 should hold now as a strong resistance and market should correct further. It is quite possible because of what is happening in Europe that this trend would breach down. You might see some panic where immediately we might come to 7800 and then probably there might be a stagnation in the market. Okay. We are not bullish, but at the same time we are not expecting that we are entering into a bear market. Still some downside is left. I won't go long in Nifty. Okay. Bank Nifty, if you see, there is huge formation of short positions which is taking place. This is purely by stronger hands. If you look at FIS data index futures, though the net figure is not high, but if you look at the open interest has expanded significantly. Okay. And they are the guys who are shorting Bank Nifty futures. And if Bank Nifty has to go down further, I don't think so. Nifty may immediately give you good upside.
All right. Okay, Siddarth, you don't play the Nifty at all? Although you're sensing it is going down, will you take a position, a short position in some fashion in the F&O market? And in any case, you have a sell on ICICI Bank. So let's begin with that.
Yeah, so Nifty, it's difficult to create short positions now unless and until you see a bounce till 8200 and then there are again parameters which are suggesting that it would correct again. Then one should have, short. At the same time, people who are still short in Nifty, they should continue to hold on. That's the suggestion. As far as ICICI Bank is concerned, I mentioned about how Bank Nifty is seeing huge formation of short position and it has nothing to do with weaker hands of the market. Stronger hands of the markets are shorting. ICICI Bank, you have seen that there has been a decent bounce from 280 odd levels, lows of 280s, and then it has bounced back to almost 300 levels. There is a scope of more, probably 2-3 rupees higher. But this bounce back, we haven't seen any form of formation of long position. In fact, there has been some reduction in open interest, which suggests that it is merely short covering bounce. We believe this may not sustain. And ICICI Bank is sell on rise candidate, and even at current levels of probably 1% higher, one can go short for a target and stop loss mentioned on your screen.
All right. Siddarth, sell as well on L&T.
Yeah, though stock has not corrected significantly and it has been moving in a range. But if you look at the open interest data, it is seen that the shorts which were formed in first leg of fall, which was like 1.5 month back, those shorts are still holding. Stock is finding difficult to move above 1720, 1750 odd levels, which is acting as a resistance. Last 3 trading sessions, stock has corrected. We have seen some traces of fresh formation of short positions. And if you are expecting market to go down, I think this stock can also show that the current support, which is somewhere around 1650, 1670 odd levels, that support should go. So we are anticipating further formation of short positions in L&T, and that's the reason we are recommending to go short. We anyways don't have very aggressive targets here, but one can expect around 1587 and keep a stop somewhere around 1705 and go short.
Okay, and finally you have a buy on Tata Steel.
Yeah, so we are bearish or slightly negative on market, and I'm giving Tata Steel a buy. So may not go in line with view, but what we have observed that Tata Steel has seen pause in formation of short positions. We are not seeing any fresh formation of short positions over here. Stock has decent support at current levels around 290 to 95. There can be a short covering bounce. We don't have very aggressive price targets over here, but 321 is what I'm expecting. So one can fix stop somewhere around 279 and go long. 285, you can fix the stop somewhere around 286 and go long. We are not expecting 285, 290 support to be breached, though, in Tata Steel.
All right, Siddarth, thanks for joining us and taking us through all of those trading ideas.